Hi everyone, welcome to our channel. In this video, we learn what stocks are, how they work, and why people invest in them. Okay? Let's start stock market basics. What is stock? A stock means a small part of a company. When you buy one stock, it is also called as a share. You are buying a small ownership in that company. Example, imagine a company has 1,000 shares. You buy 10 shares. Now you won 1% of that company. Here, shareholder means you are called a shareholder if you won even one share. Why do companies issue stocks? Companies need money to grow for things like opening more stores, building new projects, or marketing. To raise money, they can sell shares, small ownership parts to the public. Example, a new company needs 10 lakh to grow. So instead of taking a loan, they sell shares to the public. People buy those shares and become a part of their company owners. Like types of stocks. Common stock, most people invest in this type. You get voting rights. You can vote on big decisions in company meetings. You may get dividends if the company decides to share profits, but it's not guaranteed. Yes, dividends are typically paid out of a company's profits, and the decision to distribute them is made by the company's board of directors. Some companies, especially those in growth phases, might reinvest profits instead of paying dividends. Others, like established in companies with stable profits, might pay regular dividends. So common stock can potential generate income through dividends, but it's essential to research the company's dividend history and policies. So it may not get a dividends. It's if the company is doing well, your stock price may go up. Example for common stock. Let's say if you buy common stock of Tata Motors, you attend the annual general meeting and vote on a company matters. So this year Tata Motors earn good profit. They decide to give a rupees 5 dividend. You get it. But next year profit is low. The company doesn't give any dividend. That's allowed. Dividend in common stock is not guaranteed. Hope you understand well. Preferred stock. The next type is preferred stock. You do not get voting rights. You get a fixed dividend every year, no matter what, unless company get a big loss or a big profit. In case the company closes, preferred stockholders get paid first. Example for preferred stocks. Let's say you buy preferred stock of ABC Limited Company. You don't get a vote in the meetings. Every year the company gives rupees 5 per share as a dividend and you always get it, even if a company's stockholders don't. Dividend is preferred, stock is fixed and more secure. Key difference in this: voting rights, yes in the common stock, no in the preferred stock. Dividend not guaranteed in the common stock, fixed every year in the preferred stock. Priority on shutdown, paid after preferred to the common stock, paid before the common stock for the preferred stocks. How the stock market works. When the people wants to buy or sell stocks, they do it through a stock exchange. a marketplace for trading shares. Stock exchange means a place where shares are bought and sold. NSE means India's biggest stock exchange. BSE means Asia's oldest stock exchange. Companies list their shares here so people can invest. If you want to buy shares of Infosys, you go to NSE or BSE using a mobile app or a broker. Who is the broker here? Broker, you can not buy stocks directly. You need a broker, someone who helps you buy or sell stocks on the exchange. Popular brokers in India, Zerodha app, Upstock app, Angel on Groww. Price change. Why stock prices go up, down? Stock prices change every second. Reasons: good news. More people want to buy. Prices goes up. Bad news. People sell. Price goes down. Company profit or loss. Government policies. Economy conditions. Example, Tata Steel announces record profit. More people want to buy. Stock prices rises. But if they announce a loss, people sell. Stock prices falls. Why do people invest in stocks? People invest to earn money in the future. Stock prices can go up, you can sell and make a profit. You may get dividends regularly. Better return than savings account or FD over long term. Example, you buy a stock at 100 rupees. After 2 years, it becomes rupees 150. So you earn 50 rupees profit per share. Risks involved. Yes. Stock market is not 100% safe. Prices can go up or down. You may lose money if the company doesn't perform well or due to bad news. For example, you buy at rupees 200, but later it falls to 150. If you sell, you lose 50 rupees. That's why expert says invest only what you can afford to lose. Tips for the beginners. So start small investment like 1,000 rupees to 5,000 rupees to just learn how the stocks, how business, how the market is goes up and down. You have to first understand the market first, then invest little amount. Don't follow random tips. Do basic research. Never invest money needed for the emergencies. So diversify. Buy 2 3 different stocks instead of putting all money in one. Stay patient, don't panic if price goes down. Key term summary. Stock market basics. Beginners friendly terms, how to understand the basics. Stocks are a share, a small part of ownership in a company. When you buy a stock, you become a part of owner of that company. Shareholder, a person who owns one or more shares of a company. Example, if you buy 10 shares of Infosys, you are a shareholder of Infosys. Dividend, a part of a company's profit given to the shareholders. Example, if a company gives 5 rupees per share as a dividend, you have 10 shares, so you get rupees 50. Common stock, explained you already. Most common type of stock gives voting rights. Dividends not guaranteed. More risky but can give higher returns. Preferred stock, special type of stock. No voting rights, gets a fixed dividend every year, paid first if a company shut downs. Voting rights. Voting rights means right to vote in a company's meetings. Only common stockholders usually have this right. Stock exchange, a platform where people buy and sell shares. Example NSE and BSE. NSE is the National Stock Exchange, BSE is Bombay Stock Exchange. Broker, a middleman or a company that helps you buy or sell stocks. Example Zerodha app, Groww, Upstock app. Market capitalization means market cap, total value of a company in the stock market. Formula share price into number of shares. Example rupees 100 shares into 1 crore shares is equal to 100 crore market cap. Bull market, when stock prices are rising. Example, everyone is buying stocks and the market is doing well. So that is called a bull market. Bear market, when stock prices are falling. Example, people are selling stocks and the market is going down. IPO, initial public offering, when a company sells its shares to the public for the first time. Zomato IPO is in 2021. People could buy its shares for the first time. Demat account, a digital account to hold your shares safely like a bank holds your money. Trading account, an account used to buy or sell shares. It works with your Demat account. So the next video will discuss about the Demat account and trading account. So the key summary I've given here: stock, shareholders, dividend, common stock, preferred stock, voting rights, stock exchange, broker, market capitalization, bull market, bear market, IPO, initial public offering, Demat account, trading account. Thank you for watching. If this video helped you understand stocks better, like the video, share with friends, subscribe for more simple finance lessons. Thank you.